Today we're going to be taking a look at which is the best lifetime ISA for you to use this year. I always find it quite surprising how many people overlook the lifetime ISA because it's such a good tool. For every £4,000 you contribute, the government will give you £1,000 for free. That's 25% bonus on the money you contribute. And that money grows and eventually you will get it all tax free. I don't know about you, but definitely last year my investments certainly didn't do 25%. So it's definitely a no-brainer and it's the account that I tell everybody to start filling first. The main thing you need to figure out is whether you're going for a cash lifetime ISA or a stocks and shares lifetime ISA. Typically, I would recommend the cash one if you've got less than 3 to 5 years and the stocks and shares one if you've got a longer timeline. Personally, I'm choosing to use it for retirement to give me a boost. That means I can contribute until age 50 and then it freezes, but it will still keep gaining compound interest and I can withdraw the money at 60. Honestly, because I've got an appetite for risk, I would probably go for the stocks and shares version anyway, but the cash option is there, especially with the interest rates being quite good at the moment. And what I'm going to do this year is I'm actually going to pop these on my website as well, so you can check it throughout the year and make sure they're still up to date. So I'm going to compare all of the providers side by side so you can make up your own mind which one you think is the best. I'm going to tell you which one I think is the best and share with you exactly what I'm doing this year with my lifetime ISA. Now I have to admit before we begin, the amount of providers that offer this are super limited. I've actually done some digging over the past 2 years and I now know why. Because there's so much hassle for the providers with the money you put in and making sure you get that bonus. Plus they have to manage the penalty if you take money out, and then they have to manage all of the systems, so putting it towards a house or putting it towards your pension, it actually becomes a lot of work. And because you're actually only putting £4,000 in for the year, it doesn't actually make them much money. So what they essentially want is people with big pension pots where they can make the real income, or people who are going to trade quite regularly. So the providers who are doing it are likely either charging more money or they're doing it as a service to get you into something else. For example, it could look good to have all of your accounts in one place, which could be a huge selling point. I wish more providers would do it, but this is the situation we're in. So the providers I'm going to mention in this video are Hargreaves Lansdown, we've got Nutmeg, we've got Moneybox, AJ Bell, Doddle and One Family. They seem to be the most popular that everybody's talking about. If there's one not mentioned here, use this table as a way to compare against those. Okay, let's dive into this. So first we've got the platform fee. So that's a fee you're going to pay for having your account open. The Hargreaves Lansdown account fee is 0.25%, which is capped at £45 a year for stocks and ETFs. If you go for funds, that isn't capped, so you need to be aware of that. Nutmeg is 0.45% to 0.75%. Now this one is interesting because with a cheaper fee, what they say is they won't really do any active management. So they will take your risk level and just check back in 12 months time to make sure you're still happy with it. And technically their platform is about managing your money. So I would think if you're going to use them, you really want to pay the higher fee or you would be better off somewhere else. Moneybox charge you £1 plus 0.45%, but that is also uncapped. And AJ Bell charge you 0.25%, which is capped at £42 for the year, slightly below Hargreaves Lansdown, which is a normal strategy. And like Hargreaves Lansdown on funds, that also isn't capped. Doddle come out quite affordable at 0.15%, again uncapped, with a minimum charge of £12 for the year. And One Family are the most expensive on the list, and they come in at 1.1%. Now with some of these fees, although they may seem higher, remember you're only going to be putting in £4,000 for the year. You will get that government bonus, but again 1% on £5,000 is only £50 for the year, so it's not horrendous, it's still under a fiver for the month. Now next let's talk about the trading fee. So this is a fee you will pay each time you buy something on the platform. For stocks and shares, Hargreaves Lansdown charges £11.95 for stocks, which is quite expensive. That does reduce if you buy over 10 per month, but I don't think any of us are going to be doing that. There is a better way to do this, which I'll mention in a minute, and also they charge a 0 for funds, which is quite appealing. Nutmeg, Moneybox, Doddle, and actually One Family too don't charge you anything because you're investing into their funds also. So they don't charge you anything to actually buy them, which is pretty nice. And AJ Bell charge £9.95 for stocks and £1.50 for funds. Now, the cheaper way to do this is actually by setting up a recurring buy. So you buy it once for the larger fee and then just set up a smaller amount to go into it each month. So with Hargreaves Lansdown, that's going to cost you £1.50. With Nutmeg and Moneybox, it doesn't apply. With AJ Bell, you can do this again for their £1.50 charge. And with Doddle and One Family, again, it's 0. Now, one way you might want to go with this is the fund fee. So you might want to just buy funds because it would be cheaper to do that in a lot of cases. And pretty much with all of the providers, it's 0. The only one that's going to charge you is AJ Bell with that £1.50 charge. The FX fee or the foreign exchange fee, this is when you buy in a foreign currency. Now, this doesn't apply to everybody because you will buy the ETFs or the funds in your own currency, so you're not going to pay anything. It only really applies when you're buying, say, US stock, so it's only going to really be applicable to AJ Bell and Hargreaves Lansdown. Hargreaves Lansdown is 1% and AJ Bell's is 0.75%. And those do get cheaper as you buy more in quantity. Now next up, let's look at what's on the platform because I think this is what's really going to shape your decision. If you're interested in stocks and shares, you've got HL, which have got over 8,000, and you've got AJ Bell, who have got over 2,000. Or you can go for Doddle, which is also by AJ Bell, which have got a whopping 80 on the platform. Everybody else doesn't have any shares. And if you were looking for fractional investing, unfortunately, there are 0 that offer it. So you can't buy, say, £10 of a company instead of £100. In all of these, you've pretty much got to buy 1 share. Of course, with the fund platform, it doesn't matter. You can just put £10 into a fund, so that might be a better option. Now, in terms of what funds are actually available on the platform, there's quite a stark difference. So AJ Bell has over 3,000, Nutmeg has 4, which are their own, Moneybox has 3, and AJ Bell has over 2,000, which are included with their stocks and shares, so I couldn't get an accurate figure, but still pretty decent. And Doddle are actually a step up from Nutmeg and Moneybox at 7, and then One Family has just 2. Now, I don't think the amount massively matters. In fact, if it was me, I would actually make one fund, which would be the World Fund, which everybody would invest in. So actually with some of these platforms who are kind of designed at people who don't know a ton about investing, giving them less choice could be far simpler. I mean, even how to choose between an ESG fund and a non-ESG fund is quite complicated for a beginner. Now looking at the platforms specifically, they all actually have a mobile app, which is pretty great, except for One Family. Not sure why, it would be nice for them to add one. And on the desktop side, they all have a desktop platform except for Doddle. Now, I think this is because Doddle is just designed to be a simple investing app. So for the moment, at least, they're not interested in getting the desktop platform. Personally, I feel like I want both, but that's just me. Now, in terms of research on the platform, Hargreaves Lansdown have quite a decent amount of research, AJ Bell have some, and the rest don't really have any. It's just information about their funds. The user interface I always like to look at because I think it's important that you really like the app. Hargreaves Lansdown is really nice, it's a 9 out of 10, it's detailed and it's clean and it's easy to use. Nutmeg and Moneybox I would give a 7, they've got a nice interface, I just wish it was a little bit more detailed. AJ Bell, I think, is a bit stuck in the past and really needs a design uplift. Doddle's got much nicer branding, but again, a little bit simple, so again, giving it a 7. On One Family, I would give a 7. It's a nice brand, but it's just a bit lacking that it doesn't have that mobile app. And of course, I shouldn't even have to say it, all of these providers are FCA compliant, and they're all covered by the £85,000 FCSC, so your money is completely safe. And again, that's held on your cash, and your assets are held separately. Not that I think you'll have more than £85,000 in a lifetime ISA anyway, unless you've got pretty lucky. Next, something that's quite important is company age, so you might want to go for a more established provider. HL is over 42 years old, you've got Nutmeg at over 12 years old, Moneybox is over 7 years old, AJ Bell's actually over 28 years old, Doddle is only 1 year old, but remember they are part of AJ Bell, so technically they're still 28 years old too. And One Family, even though I think they're lesser known, they're also 19 years old. Now next, onto my favourite section, which is the Trustpilot reviews. Take these with a pinch of salt, but it's always good to see if there's any red flags. So Hargreaves Lansdown is 4.2 over 7,400 reviews, Nutmeg is actually down at 3.7 with over 1,500 reviews. Now I did notice in a few of the comments people are not really happy because they've invested in these ethical funds, and now the company seems to have been bought by JP Morgan, who aren't the most ethical, so people aren't very impressed. So I don't know whether that's contributing to that low score. Moneybox is 4.6 with over 1,300 reviews, AJ Bell 4.7 with over 3,500, Doddle has got 4.1 with a whopping, wait for it, 29 reviews, whoa. And One Family is 4.6 with over 1,900. Now, as I say, take that with a pinch of salt because it just depends how vested they are in the Trustpilot platform. More importantly though is support. How good is the support on the platform? Now, Hargreaves Lansdown by far is the best support I've had anywhere. When you send a message or you call them, you speak to someone who actually sounds like they know what they're talking about. They're not low-level support agents who can't really answer your questions. In fact, I would say that's probably one of the biggest selling points of their platform. Nutmeg offer phone, ticket and chat support. Moneybox offer chat and phone support. AJ Bell, phone, ticket and chat. And Doddle offer only app and email. I think it's because they want to keep it within the app. And One Family offer phone and ticket support too. Something you don't really think about at first, but actually once you get in the platform and you can't speak to anybody, it will get pretty damn frustrating. And last but not least, something I get asked about all the time is transfers. Can you transfer into the platform in stocks, or is it just in cash? Well, HL, you can actually transfer in stocks and cash, which is a huge plus. Nutmeg and Moneybox, you can only transfer into cash because you would have to sell your investments because they don't have them on the platform. You'd have to sell, move the cash, and buy their funds. AJ Bell let you transfer in with an estimated wait time of 3 to 6 months, so just bear that in mind. If you need to sell something in the short term, it could be tied up. And Dodl and One Family, again, are going to make you transfer in as cash because you're forced into really buying their funds. Dodl being a new app, I'm not too sure about. You might need to ask them. Maybe if they've got some of the stocks within their 80, they might let you keep them. But typically, I would say you're going to have to put it all in as cash. Now, typically at this point is where I would give you a tier list and say which is better than another, etc. But it's very difficult in this case. I would say I would class 4 out of these 6 as being kind of robo-advisors. The services where you're going to pay a bit more and they manage the money for you. Now, I get asked all the time why I don't really recommend these, and that's because I don't think they generally outperform the market. It's hard enough to do it if you're an extremely good investor. Even people like Warren Buffett and Terry Smith struggle to do it some years. So I've always thought I'm not paying a higher management fee to not even perform the market. I could go to another platform, buy one ETF, and that's literally all I need to do. And I've not really heard of people singing their praises that they've made so much money from going with them. So really, I see it as you only really got 2 options, either Hargreaves Lansdown or AJ Bell. They're both pretty similar and there's not much between them. For me, I'm tipped towards Hargreaves Lansdown because I think the app's better and they charge 0 for buying a fund. And to be honest, the customer support I've received from them has been the best across any platform I've ever been with. So although they are branded as being this expensive provider, they're actually really not. In all the comparisons you will see on the other people's websites, it's like Hargreaves Lansdown is miles more expensive than everybody else, which is just manipulated. They make it sound like you're buying 20 US stocks every month and paying a massive FX fee and paying £10 per trade, when in reality, nobody's really doing that. If you were really active, you probably wouldn't be using any of these platforms and you'd be going for something way more detailed, possibly even looking towards day trading software. For a normal person like me, this is where my strategy comes in. And with Hargreaves Lansdown in my lifetime ISA, I'm actually buying a fund. Now remember, there's a difference between a fund and an ETF, and I pretty much always tell you to go for an ETF, but in this case, a fund actually is cheaper, which sounds crazy, right? So if we take a look at this fund, which is a HSBC FTSE All World Index. And this is a fund which is basically a global all cap, which tracks the entire market. And you can see there's an ongoing charge for this fund at 0.13%, but you will pay that with any kind of fund or ETF, some slightly higher and some may even be lower. Now, from Hargreaves Lansdown side, all they're going to charge me, they're not charging me to buy the funds or top up at any point. All they're going to charge me is 0.25%, which, yes, it is uncapped. But on £10,000, that actually works out to be £25 for the year. So essentially, that's actually under £2.50 for the month. And as that scales, I get to 20,000, that's £50. If I was to buy the ETF version, I would still pay 0.25%, which, yes, it's capped at £45, but I'm still going to pay the £12 to buy it, and then £1.50 per month. It could be argued that at a certain point when it kind of overlapped, I mean, honestly, you're talking about the difference between £50 and maybe £75, which is literally nothing. You could choose to switch over. But if you've got under, say, £40,000 or £30,000, it's going to make sense just to do it this way. And the thing is, with a lifetime ISA, because it's such a low amount, you can only put in £4,000 for the year, so topped up, that's £5,000. You're not going to have a huge sum. So it's not like a pension where if you're paying 0.25% on a pension, it would be quite expensive. I think when I worked it out, the max I'm ever going to have in a lifetime ISA is about £78,000. So typically with a ISA, you're not going to have a huge amount of money in there, so you should be just fine. And if you're looking for a cash lifetime ISA, honestly, if I told you which was the best one in this video, I would be doing you a disservice. Because the Bank of England is constantly changing their rates, it's a bit of a race to the top at the moment as to who can offer you the best rate, so it is constantly changing, and by the time I upload this video it would have changed again. So what I would recommend is popping over to Money Saving Expert to see which is the best rate. And if you've got any questions about any of these providers or what I'm doing, let me know in the comments and I would do my best to answer them. And I can't stress enough the importance of do open a lifetime ISA. I know we get so caught up in stocks and shares ISAs, but this one is just as important. If you don't open one, you're essentially missing out on the potential of £1,000 every single year, which is literally crazy. And if you haven't seen my video yet about the stocks and shares ISA, check out this one here and make sure you subscribe as I'll have plenty more coming soon, including a big SIP comparison. So thanks for watching and I will see you guys over there.